May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Pro. Today is Monday, the 7th of November. How are you all doing? Hope you had a nice weekend and ready for a good week ahead. So here we are with euro dollar. We are now neutral on the fundamental bias. You can see a mixture. Let's see the reason why, right? So we got a score of -2. Neutrality. Okay, so retail sentiment is 1. 35.65. Okay. We've got seasonality of -1. We've got trend reading of 2. GDP growth -1, inflation -1, unemployment -1, and interest rates -1. Okay, so if we take trend reading out of there, we've got -1, -2, -3, -4, -5, +1, -4. Okay, so you can see that -2 comes from, but coming in at neutral on the total bias. Interesting. I'm still going to look at euro dollar though. We've got CPI data coming out of the States this week. You saw the non-farm payroll report on Friday. Non-farm payroll still running hot in America. Now, the thing you're going to look at is if non-farm payroll came in bad, then that means the Fed are sitting back and saying, well, unemployment bad, we've got to be careful of raising rates. Okay. Unemployment good, we can continue increasing interest rates, right? Because you heard what Powell said about unemployment being affected by higher interest rates. That's how you're playing that. Now, what's important this week is the inflation data coming out of the States later in the week. So we want to pay attention to that. But could we be getting into a trade for that as early as today? We'll take a look at the technicals in a moment. We've got low and medium data coming out of the various European countries today. Some more on the slate. Even more on the slates. And then some low and medium news out of this US today. Some more medium. We've got inflation data out of Netherlands later on. A couple of speeches today. And that's sort of more towards tomorrow. So, cool. That's the slate for today. We'll take a look at technicals in a moment. Looking at pound dollar, you're still bearish. Okay. Looking at why, we've got seasonality -1, GDP growth -1, inflation -1, unemployment 1, interest rates -1. Now, you might be wondering, hold on a second. After Friday's discussion, hold on a second. So if the BOE are going to continue raising rates and there's still sort of increases that have not been priced in, that's bullish for pound. Why would we be selling pound dollar if we're bullish on pound for increasing interest rates, but we're also bullish on the dollar for increasing interest rates? And for me, the reason is the interest rate differential. It still pays more to be selling pound dollar than buying pound dollar. If right now the Fed were done and dusted and it was only the BOE increasing rates, then of course buying pound dollar would make sense. But as it stands, if you sell and hold pound dollar, you make money on swap. Of course, the bullish pound, bullish dollar scenario, because of interest rates, does create a tendency to go sideways. But I think right now the focus very much is on what the Fed are doing. Still, be very careful because technically we've seen a lot of sideways markets. We'll take a look at that further in a moment. Okay. From a news perspective, you can see we've got some medium and low tier news coming out of the UK. And that's it. So just that's the slate there for the UK. All right. Still bearish on the pound dollar. On USD CAD, we are now neutral. Okay. You can see the lots of green and then some inflation -1, retail sentiment -1, and trend reading -2. Okay. We'll take a look at that in a moment. Aussie USD, we remain bearish. Kiwi dollar, we are now neutral. So things are chopping and changing on the fundamental bias. Looking at the yen pairs, has there been any change? Neutrality on the Aussie yen. There's a buy on CAD yen. Neutrality on euro yen. The same with pound yen. and then a buy on Kiwi yen. All right, cool. Let's jump into those pairs today. Let's have a look and see what's going on technically. Okay, so starting with Aussie USD, you can see, looking at that daily time frame, price coming all the way back up off non-farm payrolls on Friday and bumping into the monthly M3. Now, the thing is, personally, what I'm looking for is I'm looking for role reversals. I want to trade a trend. Selling here and then knowing to get out over there is difficult to manage, because the problem is, if let's say on the one trade over here, I sold at monthly M3, I got out at monthly M2, how would I know to get out? Because in future months, I'd like to sell at M3 and take it all the way down to M1. So how do I avoid having to know when to get out, when not to get out, when to manage a short trade, when I can trade a weekly swing or a monthly swing? The way in which I do that is because I only trade role reversals, okay? So in this situation here, we can see this is completely sideways. We've got bulls buying over here, we've got bears selling over there. In the meantime, we're stuck in the middle, okay? Now, looking at the chart on the 4 hour, if I said to myself on the daily, I don't see any role reversals here. I just see sideways markets. Looking at the 4 hour, you can see here, it's quite a mess. We don't have any direction. Look at these moving averages. I'm not a massive fan, okay? At least not in this situation. Even in the price action today, you can see there's the 4 o'clock candle, price coming up, closing at, I don't see a role reversal left-hand side. If you put a line on top of this candle and you look left, you can see there's wicks and stuff, sure, but nothing really stands out so far as role reversal is concerned, okay? There's a slight difference in the euro dollar. Now, euro dollar on Friday, I spoke about the fact that I put my stop loss, where was it? I think it was just like over here somewhere, just above this over here, for 30 pips. And I said, right, so if price comes up and gets knocked out over here, or sorry, if price breaks this and breaks this, I'm happy to get out over here. Take the 30 pips, could have taken profit down at the M1, absolutely 100%, and made about 200 pips on that trade. I didn't do that because I was trying to hold and sell, or sell and hold, looking for price to go down lower. Unfortunately, price coming up off of this support over here, that producing what we saw over here on Friday. I never ever got a pull back down to role reversal though. So notice how we had price come up, price come down, make a higher low, price come up, closing top of the range, and then price coming down. But we haven't closed at a role reversal, which tells me that price is likely to come down again. But now we're suddenly in a situation where if you were to trade this, if you were to sell off role reversals, if you were to identify, for example, this over here, and say, price is at a role reversal, you recognize the fact that you might be in this trade for shorter than, it might still be going all the way down to M1, and that might be where you take profit. It might not go further down. However, breakouts do take place. So it's a bit of a strange situation, because looking at the daily time frame, you can see here, we certainly are not trending right now. We definitely are sideways. Okay. Last week, we were considering the possibility of price bouncing around over here and consolidating, but actually the range is a bit wider. So if you're in the market for a trade, looking at euro dollar, you can see here price coming up, closing at that resistance over there. You then mark this off an H4 on the H1 time frame. Take H4, take that top of that, take the wick of that candle, 99558. Looking at H1, you can see there. So what I'm looking for now is at the close of this candle, has price broken resistance? Has price closed at support? Or has price broken above the previous H4 candle? Okay, look out for this over here. Alternatively, you're on an M15 chart, looking for a lower low, lower high. M5, lower low, lower high. M1, lower low, lower high. Now looking at the M15 chart, you can see here price chilling at that 21 EMA, coming down. If you were looking for a double top, price breaking that M 55, coming back up for double top and then selling. However, there's no trend here, you see. So the moving averages aren't really supposed to be at play in this situation. So it depends on how you take it. Ultimately, before you worry about the tactics of taking the trade, ask yourself the question, if this is a lower high, i.e. coming off role reversal, did we come off of a lower low? You can see here, these candles coming off of the support on the left-hand side. It seems like we're stuck between this support and this resistance. Doesn't mean you can't scalp that if that's the kind of trade you like to take. But if you're looking for longer term trades that run longer, we need some better structure on the daily time frame. Okay, keep in mind also fundamentally neutral on QuantBox. Okay, so you can decide to try and chase trades, or you can wait for better setups. It's up to you. It's not to say you can't trade this right now, as long as you know how to get out and when to get out, and manage those trades accordingly, and make sure that when you sell, you're selling because this is bearish. Okay, so lower lows, lower highs is the easiest way to identify that. Back to the H1 on M15 charts, break down, pull back to 21, pull back to roll reversal and take the trade. Because right now you look at this chart and say, okay, well, I haven't got that. So you won't take the trade right now. It'll keep you out of trouble. It's a fantastic tactic, and it's very, very simple. Wait for price to pull back to the 21. If you were a bull on euro dollar last week, you can see there, look at that trade over there. And of course, that was non-farm payrolls. Okay, price breaks up, pulls back to 21. Price came all the way down and then came up for the rest of that session. You can see there, price pulling back to 21. If you did take that trade on Friday and you did buy it non-farm payrolls for whatever reason, you can see there's your roll reversal. Okay, your stop loss. If you had a 50 pip stop on that trade, guess what? You're totally fine. Okay. What's interesting is that this candle closing at this roll reversal and the 21 as non-farm payrolls came out, or just like a few minutes before. Okay. So we're looking for the same thing to happen over here. We're looking for price to break. Look at how the 21 is above the 55. Looking for price to be below the 21.55. 21 to be below the 55. Price to pull back, hit a roll reversal, hit 21, and then you can sell that down. Until then, you wait. It's a great, great, great tactic to use. Okay, it'll keep you out of trouble big time. All right, groovy. So moving on, looking at pound dollar, also daily time frame consolidating, moving sideways. On the H4 time frame, you can see there we've come up. Now you got this 21.55. You might be looking at that and say, can I sell there? Be careful of what's happening left-hand side. You got this support over here. And looking at this 4 hour, you can see we haven't really got roll reversals. It's a bit of a mess. Again, you could look at this and say, well, 21 below the 55, price currently in a buy zone, weekly M2, weekly pivot points. Okay. From H1 perspective, price chilling over here. It's not an ideal trade. But M15, you can see there, 21 above the 55, currently sideways. Are you in resistance? Are you at resistance? Wait for the lower low, wait for the lower high, take the trade. The question is, where do you get out? Maybe you're just doing day trades because of the volatility and the consolidation. If you're looking for a weekly trade, swing trade, you're not really in position right now. If this was to go down, profit taking down here, right? All right, cool. Kiwi dollar in position for a sell. Also, but the price action doesn't look like it, does it? As you can see here, why is this higher low over here? Price coming off the support. Okay. Looking at the H4 time frame, where my lower lows, lower highs, right? I'm looking for this pattern, friends. That's what I'm looking for, because that over there is a make money pattern. Now look at that pattern and then look at this pattern. They don't look the same, right? We're not seeing this pattern right now on any time frame, any charts, because right now we're currently ranging, all right? So USD CAD, we've had a look at this. Oh, look at that. Okay, so look at how helpful that roll reversal is. If you bought last week because you were just trading pivot points, and I still said to you, you need a roll reversal. We didn't get one. We didn't take the trade. I don't like buying bottom of range. We didn't take the trade. You avoided that loss, right? If you did take one of these trades, how would you have known to get out over there? And how would you be able to do that consistently over and over again, right? Very difficult. Look at this chart right now. Look at that consolidation. Not something I want to trade. Why? I don't want trades that come back and knock me out. Euro dollar happened on Friday. Cool. But at least when I sold off of that roll reversal. It was a price roll reversal. It was not a market roll reversal. It was not a great roll reversal, but I stood my ground. I got into the trade. I put my stop at MAP for 30 pips. I got knocked out. Oh, well, at least I made 30 pips instead of losing 50 pips. And I can now manage my trades consistently. Price either goes to take profit or it knocks me out at MAP or at risk if I haven't put the MAP in, right? Right now over here on USD CAD, I don't have anything that's triggering a trade. And you can see that that's keeping me liquid. In terms of the Aussie yen, yo, look at that nastiness, right? So again, if you were just looking for roll reversals right now, you'd be out of any trades on Aussie yen. It's going to keep you liquid, my friends. Okay. I look at this chart. I see red and green candles. Great. I see price going up and down. Great. But I don't see anything that I'm interested in, right? Be a connoisseur. Have a specific type of trade that you take and don't take anything else. These yen pairs will trend one day. They are very high right now. And when they do trend, I'll be ready for them. I'll get those roll reversals. I'll keep those trades running and I'll make a ton of pips. I just have to be patient. CAD yen, also look at that nonsense, right? I don't see anything, no roll reversals, no trend. I'm looking for opportunities to sell because the yens are so high. Look at your yearly pivots, see where they are right now. Not looking to buy anything yen pair related. Euro yen, okay. I don't see any roll reversals. This is telling you that if you were a bull and you bought all the way down here, you're still in that trade. That's all it's telling you. You're still making money on those buys, okay? Pound yen. You can see here, pound yen, no roll reversals, okay? And then Kiwi yen, also no roll reversals. So the only pair that's kind of sort of maybe at what was support has become resistance is the euro dollar. What's interesting is it's neutral on the QuantBox, but from a technical perspective, you've got this playing out, right? So on your M15, do you wait for the breakout and the pullback? That's one way of doing it. That's probably the best way of doing it, actually. Again, going back to Friday's trade, non-farm payrolls. If you were looking at this on Friday and saying, hold on a second, I appreciate the fact that, you know, we're bearish on euro dollar, but I'm going to be short-term bullish because of the profit-taking zone, then that's how you would have done it. You would have waited. M15 comes, you're like looking at this saying, oh, where's my roll reversal? Where's my roll reversal? Where's my roll reversal? You could have got in over there. I prefer this one over here. It's much cleaner. You're above the 21 at a roll reversal and up you go. So do the same thing over here. And if it doesn't happen, then guess what? You don't take the trade. You don't sit back and go, oh, no, I should change my tactics because my tactics stop me from losing money. Remember that your tactics aren't going to get you every single trade. They're going to keep you tidy. They're going to keep you consistent, all right? So there will be situations where price will not pull back to 21. It'll just drop down, but you don't want to take that. You don't want to take that type of trade. You want those pullbacks. You want those lower highs because that is a trend behavior, all right? The problem is if you're only trending on the M15 time frame and not any other time frame, you have to remember how to get out. Okay? So be patient, be disciplined. Make sure you know what you're looking for. Have that tactic that keeps you out of trouble at the end of the day and gets you into good trades. Be disciplined when you use it, and that'll help you stay liquid. Good luck today, my friends. Remember, whatever happened last week, whatever choice you made last week, this is a whole new week, a whole new leaf. Today, you can be disciplined. You can be patient. You can remain liquid. The power is in your hands. You are in control of your behavior. I wish you luck. See you tomorrow. Cheers.